What if the biggest AI investment opportunity isn't where everyone is looking? Right now, billions of dollars are flowing into private AI ventures, but a growing number of analysts are asking whether public markets might actually be the smarter play. Today, we are breaking down the two sides of the AI allocation coin and what it means for your portfolio and the broader economy. Artificial intelligence is no longer a niche technology bet. It has become the defining investment theme of the decade, reshaping how institutional investors, pension funds, and individual traders think about capital allocation. From semiconductor giants to cloud infrastructure providers, AI is embedded across nearly every sector of the public market. At the same time, private equity and venture capital firms have been raising enormous funds dedicated exclusively to AI startups, promising outsized returns for those willing to lock up capital for years. The core tension is straightforward. Private AI investments come with high return expectations. Early-stage companies developing foundation models, robotics, and AI-powered software can deliver exponential gains if they hit. But these investments are illiquid, often locked for 7 to 10 years, and carry substantial risk of total loss. Public AI investments, by contrast, offer something that has become increasingly valuable in today's volatile macro environment: agility. Investors can enter and exit positions in seconds, rebalance portfolios in real time, and respond to news cycles, earnings surprises, and regulatory shifts without being trapped. A recent analysis from AICIO highlights that the increased agility available in public markets might actually provide more value than the higher return expectations embedded in private market deals. This is a significant reframing of conventional wisdom. For years, the institutional investing playbook assumed that illiquidity premiums justified the added risk and the long lockup periods. But in a world where AI technology is evolving faster than any previous technology cycle, being able to pivot quickly is not just a convenience. It is a strategic advantage. Consider the pace of change in artificial intelligence over just the last 24 months. Companies that were considered dominant players have been disrupted almost overnight by new open-source models, regulatory crackdowns, and shifting enterprise adoption patterns. An investor locked into a private fund betting on yesterday's AI champion has no exit. A public market investor can rotate out of a struggling position and into a rising one within the same trading session. Experts in institutional asset management are increasingly pointing to this dynamic as a reason to reassess the public versus private split in AI portfolios. The traditional 60-40 model is being replaced by a more nuanced framework that weights liquidity as a return factor, not just a constraint. Some chief investment officers are now arguing that a well-constructed public equity strategy, built around diversified AI exposure across infrastructure, applications, and enabling technologies, can match or exceed the risk-adjusted returns of private AI funds while preserving the flexibility to adapt. The broader implications extend beyond portfolio theory. If public markets become the preferred vehicle for AI capital allocation, we could see accelerated growth in AI-focused ETFs, increased analyst coverage of mid-cap AI enablers, and greater retail investor participation in the AI economy. This democratization of AI investing is a structural shift that could reshape market dynamics for years to come. Looking ahead, watch for how institutional investors report their AI allocation splits in upcoming quarterly disclosures. Pay close attention to earnings calls from major asset managers for any signals that private AI commitments are being scaled back in favor of public market strategies. Also monitor regulatory developments around AI companies planning IPOs, as a wave of new public listings could dramatically expand the opportunity set available to investors of all sizes. The bottom line is this: artificial intelligence is not a single bet. It is a spectrum of decisions, and the smartest investors are those who understand both sides of the coin. Public markets offer something that private deals simply cannot match right now, and that is the freedom to move at the speed of AI itself.